Hi, I'm Abhishek Goenka, and I'm a partner in the Corporate International Tax Practice of PwC India. One of the most important changes from a tax perspective in Budget 2018 has been the introduction of long-term capital gains on listed securities. This is a change that was widely anticipated, and with the government struggling to find new avenues to raise taxes in order to fund some of its other development objectives, this was perhaps the most low-hanging fruit that they could have gone after. Additionally, the fact that the stock market is somewhat overheated perhaps gave them the courage that this was a good time as any other to do it, because even if there was to be some correction, which actually hasn't happened because it seems like the market had already priced it, the overheated stock market could have dealt with that fall. In terms of details, what this new provision essentially envisages is that instead of the normal rate of 20% that applies on long-term capital gains, a concessional 10% rate would apply, of course, without any benefit of indexation. There's also a sweetener that all accrued income or all accrued value really till 31st January is grandfathered. So essentially when you sell your shares anytime after today, it's only the incremental gains from the value that the stock closed at as of January 31 that's going to be taxed. So to that extent, it is not seeking to tax all the historical gains, but only new gains that accrue to any investor from the time the new law is introduced. This provision also applies to foreign institutional investors, and to that extent parity has been brought in. But on the flip side, when it comes to short-term gains, foreign portfolio investors have a concessional rate of 15% and domestic investors continue at 30%. So that's perhaps a philosophical debate that needs to be resolved. Similarly, corporates who earn this 10% capital gains have still to deal with the MAT that applies, and to that extent, the lower rate benefit may not immediately accrue to a large number of domestic investors. In summary, therefore, a fairly material change, something that pretty much alters the very fabric of how capital gains are taxed in this country. One will have to wait and watch how some of the finer details get ironed out and what the real implementation effect of this change will be.